Hi guys, so today we're gonna go over this trade that I took yesterday, 1st of July. So we'll start on the weekly, and this video is going to be about how to put in together context and how to, look at trades. We'll start today actually going to look at whether we have news yesterday or not. So yesterday it was Monday, and so that in itself should tell you about some things. It's the first day of the week. Our weekly candle is just opening up. Usually Monday sets up like the sort of direction for the rest of the week. Looking at Monday, we have Euro news all throughout the day, and we have USD PMI at 10. So it's not a no news Monday, so there is going to be some volume today. So we can trade if there is a trade available. So looking on the weekly, you guys can see that we created this bearish fair value gap previously. We were coming down, retracing, continuing downwards. We have this fair value gap, we just tapped into it yesterday. So this is the weekly candle, and yesterday it was only the first day. So within one day, we've already got so much range. I know right now it's Tuesday, but I'm pretty sure this wick was from yesterday. So it went all the way up there just with one day. We can see how overextended that is. And you guys can see this is pretty much the whole yesterday's wick. We broke out of this range because last week we were just consolidating. If you just sort of think about the fact that we were in a weekly fair value gap, it's only the first day of the week. We do have volume today because there is some sort of news, and we just broke out of a consolidation range. You can see there's a lot of liquidity to be swept. Okay, so going down to the 4 hour, we can see straight up is bullish, right? Because yesterday the trade was around here, so straight up is like very bullish here. We got this 4 hour fair value gap here. So if I put back the drawings, this is the trade there. So we were all the way up, and I still shorted yesterday despite being bullish. And the reason why is because we have this SMT right here. Going on GU, you can see. Going on GU, we see that it went down instead of going up. EU went up. So we have this very higher time frame SMT right there, showing that we probably have a reversal coming. So with that being overextended, with that SMT, with this being the weekly fair value gap right there, we swept past this high as well. And I continued downwards. It was London's session, so we haven't really actually made much structure on the 1 hour, like much bearish structure. But now even on the 30-minute, we didn't actually make much bearish structure as well. And so going down to the 5-minute, what I did was just I went down to the 5-minute. I found a 5-minute fair value gap right there, and after it respected the 5-minute, after we tapped into the 5-minute, we came down, broke past this low, we created a fair value gap right here, and when it entered that fair value gap, I just entered with stops above that high, leaving a bit of breathing room, and then targeting that low. And the reason why I was targeting that low was because we have a 1 hour fair value gap and a 4 hour fair value gap there. 1 hour fair value gap. The Asian session low is here, by the way. So I did target a little bit short. I could have targeted all the way down here, but we had New York session coming out, and we also have 10 p.m. news. So I just thought it would be safer to target there. And 4 hour, we also have a fair value gap there. And because these 4 hour fair value gap and 1 hour fair value gap could potentially push the price higher if it wants to, although I would think it's unlikely. That's also why I took the trade out early, because that's also why I aimed shorter, because this 4 hour fair value gap and 1 hour fair value gap could push price higher. Let's go through the 4 criteria, right? The 4 criteria was that we need a higher time frame point of thing, like a higher time frame confluence. And in this case, my higher time frame is actually the SMT right there that gave me the confirmation that gave me the criteria for my trade. We have a very strong drawn liquidity as well. If the drawn liquidity is weak, I'm definitely not going to take it, because we have this 5-minute 1 hour fair value gap, and we're also very overextended, so we need to draw back to fair value gaps, and we also need to draw back to rebalance to equilibrium. We also have an inducement range right here, which is when all these lows are just neatly still there, and all of these lows are still not taken out. We're just slowly making higher highs and higher highs and higher higher highs and higher lows as well, and all these higher lows are just not getting taken out. I guess you can see liquidity, 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 liquidity. So there's just a lot of liquidity there. That's also a reason why the draw on liquidity is even stronger, because we have all this liquidity down there. The higher time frame is definitely the SMT. The entry model is the 5 minute and a 1 minute, and the reason why on this occasion I require a 5 minute and a 1 minute is just because it's not as strong confirmation as the rest, okay, because it's a reversal or a retracement trade, so it's not really a continuation trade. Usually on continuation trades I just look for a 5 minute fair value gap, because all the higher time frames line up a bit more, and a continuation is usually when we retrace, right? So today seems like we'll get a continuation trade, like going up. We created this 4 hour fair value gap there, we tapped into it, we created a 1 hour fair value gap. I don't know though, but we'll just have to see how price looks like, but we could potentially get a continuation trade here. But on the 1 hour it also looks a bit bearish right now. But anyways, that's just went a bit off on the tangent there, but that's just what a continuation trade is. So with a reversal trade, that's also why I want a 5 minute and a 1 minute confirmation. The last thing is just a sweep of liquidity. The thing is, the sweep of liquidity here was, we do have a higher time frame sweep here, but we have to keep in mind that because it's on the daily, yesterday when we were sweeping this high, this candle was still all the way up. So you can imagine yesterday this candle looked like this. It was just a full candle of blue, right? A full up candle. And even on the 4 hour as well, this is not exactly a sweep because it's a break of structure, but on the daily it's a sweep. If we go down and we look at the Asian session high, it also wasn't really a sweep. We literally closed above it. So yesterday's trade, but the thing is, we closed above it, but we didn't create any fair value gaps or anything. So that's also why I thought it would go down. So yesterday's trade definitely was, for me, I think it's a more risky one, because even though all the context aligns, it's not 100% to my plan. I have to sort of find other things to fit my plan into it. So yesterday's trade was definitely more off of context than on my strategy, but it's sort of like molding my strategy into the context. And I think with trades like that, I just take smaller size. So yesterday I just took half my usual size, and because as you guys know, I just added money into my account, so even the smaller size is more profits than I usually get. In terms of context, we need to know what the higher time frame is doing. We need to know what the higher time frame looks like according to our plan, and we also need to know what news we have and when it is, and also what day we are on. And for me, I just like to look at where we are at in terms of the week, in terms of the day. Yesterday we started off here, right? So I guess it's Sunday, but if you still look at like Monday, it's like here. So we were still above midnight open, we're above weekly open, which is all the way down here. It would be wise to think that we would have a retracement sometime soon. But yesterday's trade was definitely a bit more risky because we haven't got structure built out yet. So I definitely wouldn't say that it's like, oh, I'm smart or anything. If I was to continue taking trades like this, I'm sure the win rate would be lower. But the thing about trades like these is just that because it's all the way at the start of the move, the risk to reward is higher, so it does allow for a lower win rate. So that's why I still took it. But anyways, yesterday what could have happened was you can also take that trade after 10. After 10 we have news. Remember that PMI? So we have 10 o'clock here. So we went up and we went down, and we closed within this fair value gap right here, and we respected it. So we closed below this fair value gap right here. So with that, we can also just take a short here and then target this low. So there was plenty of opportunity yesterday. We just need to align ourselves with the higher time frame context and just where we're at. And the main point of this video is just look at the news and look at where we're at, what day it is, and stuff like that. So if you guys like this video, then remember to like and subscribe, and I'll see you guys in the next one. Bye.